So another item that I want to talk about is mortgage insurance. I'm sure if you're watching this, you've probably heard the terms PMI, mortgage insurance, and everybody kind of uses the term very loosely in the sense that they say that it's the same thing for both type of loan programs. But really, it's different. So if you have an FHA type of loan, you are going to have what is called MIP, and that is going to stand for Mortgage Insurance Premium. If you have an FHA government funded loan, FHA requires an upfront financed fee and then a monthly portion in your payment. And so that fee is not going to go away unless you refinance your house to a different loan program or you sell it. Because after April, I believe April 2013 or something like that, they had implemented a guideline that you cannot waive FHA mortgage insurance premiums. The only way around that a lot of people don't talk about is if you get a 15-year fixed term, you are able to waive those premiums off of that. But if you get a 30-year fixed rate, that mortgage insurance premium is not going to go away no matter how much you pay down your loan. The only way it's going to go away is if you sell your house or you refinance to a different product that does not have that. Mortgage insurance premiums are based for the borrower on the fact that they do not have 20% to put down. So many folks, whether it's conventional, FHA, VA, they don't have 20% to put down in most cases. So that mortgage insurance is going to cover a lender in the federally backed loan in case somebody defaults on that home. So on an FHA loan, the mortgage insurance premiums are not escrowed into your payment. Every month you pay in one, that servicer sends it out. So then it goes into a large fund with FHA. So if somebody does default on their mortgage, that's kind of where the money comes into play. That is like I said, a government regulated mortgage insurance premium that is related to FHA loans. So whenever you get into the PMI, that is going to be private mortgage insurance. And a private mortgage insurance is going to be based on a conventional loan type. And so that again is because you do not have 20% to put down. So it is privately insuring the mortgage for the difference, okay? So whenever you do make your payments and you do end up paying down your loan to 80%, the Homeownership Protection Act that is in play allows you to write a written request to remove mortgage insurance. If you also make large payments known as curtailments or something of that nature to pay down your principal and you get to that 80% mark quicker than the paperwork at your closing reflects, you are allowed to write a letter asking for it to be removed, and then they will remove it. There's some other caveats that you would need to talk to servicing as far as what they require in order to get Fannie Mae loans removed with the PMI early, but I know there's some workarounds there. But again, it depends on the servicer and what the requirements are for that specific bank or mortgage company. So, but with the PMI, it is something that can be waived. You have to pay attention to when you reach that 80% of your loan to value. A lot of people say, okay, well, whenever I bought my house, it appraised for X amount and I purchased it for this, so I automatically had, $5,000 equity in the property. Well, when they calculate PMI, it is going to go off of the appraised value or sales price, and it is going to go off of the lesser of the two. So that means that even if it appraised for more and you walked into that house with equity, the PMI amount is going to be based off of the sales price. So it's going to be based off of the lesser of the two. So unfortunately, that doesn't work whenever you're trying to get PMI waived and say, I automatically walked into the house with equity. there is a situation if you reno the home and the house is then valued for more, I know we can get PMI waived on that aspect. So like I said, there's some caveats there depending on the servicer and what we offer as a bank and a mortgage company, but really understanding the terms that are used when you're out looking for houses or talking loans is really important, because PMI is related to conventional loans and mortgage insurance is going to be related to FHA loans. One you can waive and one you cannot. So it's really important to know the difference. And if you have any other questions, I'm happy to help. Thank you.